What's up, guys? Welcome back to another video. Just want to quickly go over something really important today, which is risk management and how you risk manage and plan your risk management when you have a funded account. So first of all, a quick update on my 4 accounts that are being copy traded on TopStepX. I have not taken any trade because I was coming to the day a little bit bullish and the price did not show me any bullish reactions and just kept dumping to the news wick, which is another kind of conviction level that I know that we were dumping to if we started to dump. But I did not take anything on my 4 funded accounts because the price was, you can say, a bit ugly. But I did instead take a trade on MyFundedFutures, the account that I just got funded and moved to funded with, that I passed it in one day. I lost the $1,300 today on it, and I'll tell you why in a second. So coming into the day, I was bullish, as I said. Let me actually do it on this one. So I was actually bullish, and I had marked this 15 minutes fair value gap, and I was like, if we break it through and fall through, then we go into the data wick. I didn't take it on my TopStepX platform or the TopStep accounts because the I just did not like the bias, because the bias switched on me from me wanting to be bullish, then the price showing me that it's bearish. So whenever that happens, I tend to like stand away from the chart and just not touch it unless I have a different account that I can try these ideas on. So that's one big important advice that you guys probably need to implement in your trading plan. So what happened today is I saw that we inversed this 15 minutes fair value gap. That means it's probably switching order flow from bullish. Then my bias is wrong to bearish, and we're going where? To this news wick. What is this news wick? It's unemployment claim that got out at 7:30 my time or 8:30 New York time. So we got this close right here, right? And then there was a 30 seconds chart. So after we closed below it, there was a 30-second chart right here, bullish fair value gap. And this bullish fair value gap, guys, let me also mark it here. Let me get rid of this right there. So this is the 15 minutes fair value gap, and then we go to the 30 seconds, we close underneath it, and then we went back to the 50% of it to respect it, and we had a really good, amazing reaction from it with an SMT as well. So, okay, so all of that is happening, and I, of course, at this point of time, I'm not touching these funded accounts because I had the wrong bias. So I took it on this one right here. This is the same thing. We went up to the 50% retracement. We had an SMT between ES and NASDAQ, and I took a short right here, 19,130, which is after the candle closed right here, right? Now, what happened is I did not have any stop loss, and the market did not play in my favor. The market did not play in my favor. You see this 15 minutes, we closed back above it on the 1 minute. If we go to the 5 minutes, it's a bit clear here. So you see this 5 minute, that is similar to the 15 minutes fair value gap. Look how much we went like to that 5 minute to almost fill it to the top and then react from it and go all the way down again. So I did take the short. My idea was right technically, right? Now here where stuff gets a little bit funky, where your stop loss, where your risk management, your risk plan, all of that play a part of your trading plan. So I took a trade short right here. The idea was right. We did hit and dump actually after this news wick. So the idea and the draw on liquidity was right. But where we took the trade, and because of risk management, where I did not have stop loss, This is where it ifed me over because I lost $1,300. But the good thing is about my funded future is that I still do have about $1,200 more to go because the drawdown is 2,500 instead of 2,000, which is a good thing for the trader, of course. So just a quick shout out, guys, while we're at it. If you don't have a funded account and would like to get funded, you can get funded from MyFundedFuture. Please use the link down in the description below if you want to support me, and use the code Kemo to give you an additional 5% off any purchase you get. And their accounts is pretty cheap, and there is no activation fee with these accounts. You can get a 50k account for 80 bucks. Activation fee is included in that price. You don't need to pay any single penny after you pass the account. You can go to a funded account and you can start making money, and their payout requirements is very easy. So let's get back on track here. So I took the short right here, 19,130. So I actually tried this twice. So I did take it, and then once we hit this low, I put it break even, and it got me out break even right here, right? 19,128. And then I kind of saw that we're respecting this inversion fair value gap, right, on the 30 seconds. So I got in another short. So that where FOMO gets in play. So kind of like the same fill right here, right? And I got in short, and look what the price decided to do. A lot of time, guys, and I did see this play out a lot, that when we have like data news wick low, we'll just dump straight to it, or a little bit cleaner than this. But we actually today we got about, look at this, about $80 movement of retracement, which is unfortunate, or possibly $90 movement from my entry. My entry is like around 30s. Oh, up a little bit up. So from my entry, we went up $72. So you cannot, bro, you cannot tell me that your stop loss is going to be $72. This is not trading. That's probably like being swing trading, and there's no swing trading in futures market. So you should just like get out of futures market if you want to treat it that way. But look at this. I took the short on this level, and then I got filled, of course, because my funded future has a daily loss limit of $1,200. And unfortunately, I just want to put this out there, guys. If you don't have stop loss, trade of a daily loss limit is actually terrible to locking your account out of that trading day, because it got me like, it triggered on $1,300 instead of $1,200. I'm so used to, so this is one thing, another thing, guys, that I am used to Top Step X now, and I haven't been using Trade of 8 for a while, or Trading View for a while. The candles moves a little bit slower than Top Step X, and it's really hard to see the reactions of the candle. And with putting the stop loss and the take profit, it takes a little bit of time of like right clicking and then going through the menu of trade and putting whatever you want, versus Top Step X, so you just click and drag. But yeah, the trade did not work in my favor today because of poor risk management and not having a stop loss, because obviously, and also FOMOing in, guys, because I did try this setup one time and it got me out at break even. Why did I jump back in it? I tried to kind of like got a FOMO in because I saw the 30-second kind of reacting, and you see this doji candle trying to react from the inversion fair value gap and probably like run down really quickly, but that did not happen, and we went $70 or $90 up to retrace to the 15 minutes and the 5 minutes fair value gap, almost filling it to the tick before going back down. So yeah, that happened today with my funded futures account, the funded account that I have. Now, what are the actions that I'm going to be taking to avoid that again? Now, I do have my little handy calculation, that calculator that I use, And here are some simple, like, you just put your stop loss number and whatever, and it will give you your take profit, your stop loss, how many contracts you should be trading. I also tried it with one contracts, guys. All these trades are just those two trades. Every one of them was with one contract only. So you see, with that $65 retracement up, it got me with $1,300 of stop loss. And it's really bad. It's really bad, I'll admit. But why did I leave it? So that's also another good question. Why did I leave it? Very simple, because we were dumping, we were bearish. I was assuming that we would react from any of this bearish for value gap and go down at least to here and then go down, right? When I saw this bullish green candle, I know that we will probably like turtle soup these highs, react from the bearish for value gap and go down. But no, market did not play in my favor today. And it's fine, because it's not going to always play in your favor. And this is the part of trading that you need to understand. Although you know the draw on liquidity, you're not going to get a clean price action to it, clean price delivery to it, and you might not get like good setups. So yeah, steps or actions that I'll be taking is I'll be implementing a hard stop loss level, and not just leave it like that, because that actually took away half of my drawdown, and it's pretty frustrating, but it is what it is. That's fine. I'm doing this account for kind of like experiment purposes, and I'm not really waiting to take any money from it, or I wasn't expecting any money from it anyway. And also, like, the first trade setup that I took, it went down $25. So I took it around the 30 level work. So like, you see, where is the 30? Like right here. It went about like $24 from my entry, and it was pretty fast, and I was expecting we run this low, but I mean, we did not. So the market will not work in your favor every time, guys. So try to use your stop loss calculator. If you don't know where to find the risk management calculator, this one that I created myself, I'll leave a link down in the description below for the video. You can go check out the video and understand how to use it. And the calculator is free. I don't even ask for your email address or anything like that. But yeah, try to stick to a risk calculator. And the first issue that I did, and I'll admit, but I was a bit excited and aggressive on this account, is I was trading minis. On these 4 funded accounts, I only trade micros, guys. So there is a big difference. On the mini, I'm trading with larger leverage, so I should not be holding for more. I should be taking my profits quicker than that, or I should just be simply trading M&Q. Simple as that. If I had been trading M&Q, I would have I do have the leverage to trade minis or M&Q, and I actually have up to 30 micros to trade with micros. But I don't know, to be honest. I had the mini chart open, and this is where I put my trades on. And this is one big important issue that a lot of people, and me myself, guilty of trading minis right away when you get a funded account. Please do not do that, and just to start small with micros until you build enough buffer and probably get your first payout out of that account before going a little bit aggressive. And it will give you more confidence, guys. So that's just a quick advice for me. Try to use the risk calculator that I built to calculate your risk pretty quickly, and it will give you whatever you need just really quickly. And the second thing, please do not trade minis, because minis will blow your accounts pretty quick. So yeah, that is it for today's video, guys. If you have not yet subscribed to the channel, please do, because that actually helps the YouTube algorithms. And if you like this video, why not drop a like, brother? All right, thank you all so much for watching. I will see you in the next one. Peace.